gauge, because we're not talking about Izan stocks, we're actually looking at Clive stocks, and those are for 2013, which was a difficult year for South African investors, with tumbling markets, soaring volatility, and a flailing rand making the investment environment a nerve-wracking one. With this in mind, it's crucial to choose the right stocks so that the year ahead is perfectly positioned for superior returns. As we head into the new year, Clive Ramatabela Smith, the managing member at Nkunzi Investments, joins us now to help you as an investor select quality stocks that he believes will carry investors through another difficult year ahead. Izan, firstly, you must have been very worried about the stocks that you were going to talk about in this section of the show.
Well, like, not totally. I mean, my theme on where I'm going to be next year is not very much different from the year it's passed, because I expect that even though the rand helped with those brilliant rand hedge shares, I think that those companies will still be the ones that make more money.
All right, so Clive, let's get a little feeling for what you've put together for us. So this really can be for our Christmas stocking. You know, we all use that theme at this time of year.
Absolutely. Absolutely. I mean, there were quite a number of stocks that did relatively well, and I've always said that I'm not a big gold fan, and so that's the reason you'll see the portfolio there does not have any gold at all. But Steinhoff for me has been an exceptional company the whole year.
It's also been great for the Hot Stocks portfolio. It's done so well on Steinhoff.
Unbelievable, you know, strong management, well diversified, and they've done relatively well. I mean, by June this year when they reported, their returns were up by 40%, you know, so I mean that is quite a strong statement to make as a business.
Clive, just before we get into more of your specific 14. Do you think what's happened now, everyone's talked about the Santa Claus rally, and what we're seeing now is a Santa Claus sell-off, 2.2% down on the JSE today, billion. Do you think this might be setting the tone for the beginning of 2014? And if so, when you sit down at the beginning of the new year, do you say to yourself, well, the picks I just spoke to Bronwyn about are actually redundant? Because I just sense a bit of a sea change. It may be barely perceptible, but I sense something.
You should be sensing something because it's ho ho ho, it's Christmas, isn't it? So, so what has been interesting towards the end of the year is the focus that we've put on the stocks that we've chosen. And the reason why I say that, and people have to understand, I'm not a stockbroker, I'm a long-term investment manager, so I have to be very careful. I mean, I deal with retirement fund money, and those people are looking at least an average of 30 to 40 years before they need that money again. And so the style that we've adopted is very, very key. And so at the end of this year, for example, there are portfolios that have a benchmark, which is a 3-year rolling benchmark, a 5-year rolling benchmark, and a 7-year rolling benchmark. And so if you look at those particular stocks that have been consistent throughout all the different cyclical periods, then those are the stocks, for me, I will continue to see to put more money into going into 2014. Perhaps if you have somebody that is obviously short-term, on a short-term basis, you might want to maybe change a few of those stocks, but particularly if you're going for long investment planning, then therefore you should be having some of these stocks that I've mentioned. You don't have to change much, trust me, Lindsay.
Not sure if Lindsay celebrates Christmas. Anyway, Steinhoff, Clive, Izan, do you endorse Steinhoff at this level?
At this level, it is definitely a little bit high. However, if the market comes back and pulls back a little bit more, it becomes a buying opportunity going forward in the long term.
Clive, Steinhoff is one thing. Give us some more, please. I need some more. I need something more to look forward to 2014. As Bronwyn says, I'm not celebrating Christmas, so I want to celebrate the new with a few juicy bones. Throw them, please.
I'm sure you'll be happy to know I've got Woolies there as a retailer. So, I mean, I love those guys. I mean, the stock did peak a little bit at the middle of the year, was slightly a bit more expensive, and I think it's because they were trying to do that diversification thing. And then they pulled back from Nigeria, which I thought was quite a stunt. And when they
perhaps
did,
a little early.
I don't know. You know, you have to go into Nigeria with a different concept. You have to understand the market in Nigeria, and I don't think they were well prepared. You know, Shoprite has been doing exceptionally well there. So obviously they didn't go with a proper marketing strategy of how to tackle the Nigerian market, and that's why maybe they spent a lot of money there and it hasn't reaped any rewards. So Woolies definitely my stock as well. I'll put that in my Christmas basket.
Right, so let's move on. So we've got Woolworths, we've got Steinhoff. What else have you got in your bag?
One other particular retailer that I like is Mr. Price, and it's one of those stocks that I enjoy having in my portfolio. They've been very, very good. PE ratio has been relatively low, and it's done exceptionally well this year as well. If you're looking for a stock that is on the cash basis is very strong, I look at Mr. Price and I say, thumbs up to that.
Izan, I'm going to use you as a voice of reason in this discussion. We've got a Steinhoff that you say is expensive. Yes. Woolworths, Mr. Price, do they get your go-ahead for our Christmas stocking?
Mr. Price, I like. It's a good share. Again, I'm probably going to only buy in a week or so from now because I do expect the market to come down slightly more. However, for the long term, again, very good share. I like the stock. I like it specifically because their product mix is good and the shop is always full and people love shopping there. That's it.
Woolworths?
Woolworths the same. I mean, it's a quite a different market, and I think that's probably, if they tried the Nigerian market in the same method that they did the South African market, that might have been the problem.
I think that Woolworths is a good pick. I don't know about its valuation, but certainly I was at the Constantia Village Shopping Centre today at around about 8:15. There were riot police trying to stop people buying Christmas puddings. But whether it's done enough, I don't know. But I want to know if there's any sort of Hail Marys in your portfolio for next year, Clive. In other words, things like Able, which was down 8-9% today. Oh. Anything controversial? Or are you just going to stick with the themes of 2013 and be really boring?
I'm not going to be boring. I'm not going to be boring. In actual fact, I do have some baddies there. I've got Distell there, which is one baddie. I've got Aspen, so if you for the drug market, obviously I have to supply. Those I've been bitten a little bit this year.
So you are a growth manager.
Certainly.
There's no value in your bones whatsoever.
No chance, no.
Izan, are you value or growth?
I tend to stick to the growth.
Yeah.
All right, so we're going here for all the expensive stocks this evening, Lindsay. Naspers. Now, gentlemen, Naspers has just gone through 1,000 Rand. You've got to join us on Hot Stocks. Paul's going to love you. All right, so Naspers, having gone through 1,000, I don't know what it did today. Lindsay, have you got an update on Naspers today?
107.
It was down 4%. It was one of the biggest losers. There were so many losers, but it's a very volatile stock. Anything above 1,000, of course, where people start to think to themselves, I bought it at 350, so of course I'm going to take some money off the table. We'll continue to be volatile. I think what we should look at as well, Clive, stay with the momentum play until the trend is broken. The trend is always your friend. What are the risks, though, to your portfolio, and are you putting in risk insurance? Yeah,
I mean, I think for some of those stocks that we've got that are very that are not well diversified, I think the part of the Rand weakness would have taken a bit of a toll on some of the stocks. And I have been bitten there. I know I'll have to go back to my investors and apologise. But obviously they know they're in for the long run. So let's hope that they understand our argument. But one particular stock, in actual fact, that I removed from my portfolio earlier this year was Sabaya Gold. Even though I'm not a gold fan, but we decided as a collective to go for Sabaya, and we decided to remove it because it simply was getting too hard to actually manage.
It's disappointing for my friend who's the investor relations there, James Wellstead. That's Sibanya Gold. All right, now, Izan, let's get a couple of stocks that are in your Christmas stocking. Are you right here with Clive? You still going to go for the Aspens Bidvest?
I'm definitely there with Clive. I'm not so much on the on Aspen specifically, but the breweries, the good share. The interesting thing is that Lindsay said earlier is that when it goes over that 1,000 or 100 Rand mark, they tend to have a sideways movement, which we've seen in Richmond for the last couple of months. The beauty is when they do break out of that, of course, it's going to be beautiful. It's going to be great upside. So you can stay with those good stocks.
Izan, Clive, we are now we're 4 3/4 years into the US equity market bull market. The rules have been thrown out the window, particularly in the last year or so. Bad news is good news is good news. But at the moment, as I said, I get a sense of change. The winds of change are blowing through the markets, and it's all to do with quantitative easing. If you eat 3 meals a day, Clive, you'll understand this. If you eat 3 meals a day, okay, and you cut down to 2 meals a day, you lose weight. So if they start to taper, the market comes down and loses weight. Surely, is that a risk?
I wouldn't be 100% sure about that. I wouldn't actually support you, Lindsay, because if you look at the recent data out of the US, it's been phenomenal. I mean, it shows that the economy it's not great growth, but there is certainly growth there. And you know, with China talking about pulling back its growth pace, and with Europe also in a bright light, you know, I was shocked to see the finance minister of Greece talking about the way they have built, in actual fact, in the last couple of months to get to where they are. So you can see that Europe is claiming back its glory, and so is the United States. I know we're not talking about Kaiser Chiefs, and I'm not going to go into that, but we're talking about the fact that the guys are certainly doing something right. And there will be a point where we'll have to do tapering. And when it does happen, I think most of the market has already calculated that into play.
So, Izana, I'm not sure what the relevance was of eating 3 meals a day, but I assume you also in that camp.
Yeah, definitely 3 meals a day. But the trick is, of course, in anything like this, be constant. Don't cold turkey. Do it slowly. So if they do a token 5 or 10 billion or so from the 85 on a monthly basis, and then a couple of months later, a little bit more, etc., that'll be fine. And we'll slowly get off that. The most important thing, if we really start thinking about it,